Hi viewers, for this question we are going to prepare the format of realization account. First of all, you can read out this question, then we will prepare the format. After reading this question, we will see this flowchart number 1. The total question is splitted into a couple of points to learn more. This flowchart has first of all 5:3. This is the profit sharing ratio. The final profit or loss will be distributed in this ratio. The next point is sundry debtors 50,000. This is the dissolution. The business is going to dissolve. After dissolution, there is no more balance sheet. So this balance sheet item should be write off. It should be cancelled. Balance sheet should be cancelled. So these assets are removed. These sundry debtors are removed from the balance sheet. How to remove? In case mathematical points, plus 2x. How the plus 2x should be removed? Removed means just like cancellation. How it should be cancelled plus 2x? By writing negative 2x. The same concept we can apply here. Assets nature is debit. How it should be removed? By writing credit. Debtors account should be credited. That way we are going to remove this and the debtors account. If debtors account is credited, which account should be debited? So these assets, all the assets should be transferred to another account. That account is named as realization account. So that we are writing realization account debit, debtors account should be credited. The journal. This journal we are going to post into the realization account. Look at this. Realization account debit side, we are writing to consumed assets. That is sundry debtors. If we have land and building, we have to say land and building. If we have furniture, we should write to furniture account. Like that, whatever assets we have, it should be transferred accordingly. Then we will see the next slide. In this slide, we have the assets of cash. Cash is the liquid asset. It is ready to use, ready to consume. So that these assets cannot be transferred to realization account. It is not required because it is ready to use, ready to consume. Then where it goes? We are preparing cash account or bank account or cash equivalent account. So this will go to cash equivalent account or cash or bank account. Cash is our one of the assets. Assets nature is debit. Just we are transferring. We are not removing. Just we are transferring. This is opening balance of cash. So that we are writing opening balance should be written as balance brought down. That will be completed from the total question cash. Now we will see the flowchart number 3. This flowchart has capital and liabilities. Here we have capital. Capital will go to capital account. We want to know whether the partners need to give money to the business or they have to take money from the business. To know that, we are preparing capital account. Or we have to prepare statement of partners capital. Let's see, this is the opening capital. Capital nature is credit, so that it should be entered on credit side of capital account. Opening capital we have to write as by balance brought down. This is where we are completing capital and liabilities. Now we will see next slide. In this slide, we are going to discuss about the capital and liabilities. Here, first of all, I am presenting capital. This is the partners opening capital. We have to prepare statement of partners capital. We are preparing statement of partners capital. The beginning of the year, their opening capital is 11,000 each. So this will go to statement of partners capital. Opening capital, we are writing as opening capital balance. A amount 11,000, B amount 11,000, C amount 11,000. Then the total should be 33,000. This is where we are presenting. Now we will go for the, now we are seeing the next slide. In this slide, I am presenting some liabilities. For the examples I have given, provisions, number 1 provision, number 2 loans. This provision and loan should be transferred to realization account. Just we have to remove. Liability nature is credit. Liability nature is credit. If you want to remove, the liability account should be debited. Then which account should be credited? That is the realization account. Because all the assets and liabilities are transferred to realization account to realize assets and settlement of liabilities. Let's see. Then for our understanding, I separated some items are non-outsiders liability, some items are outsiders liability. Non-outsiders liabilities are the liabilities which is not required to pay outsider. It is not the legal obligation. No one will ask money to pay that. In case outsiders liability, some are claiming money. This is our legal obligation. If we make payment compulsory, that is the outsiders liability. Here, provision for doubtful debt. It is the internal liability for our own purpose. For the internal adjustment, we create this liability so that it is known as non-outsiders liability. Not only provision for doubtful debts, even joint life policy reserve. Joint life policy reserve. Like that, some items we have. Remaining all are outsiders liability. What are the outsiders liability? That is the loan, bills payable, bank loan, whatever may be. These are the outsiders liability. We should make payment. So this is, we are separating. This is for our own understanding. Even if you are not separating also, it is fine. To make settlement of liability, the separation will be helpful. Otherwise also it is fine. Now see, provision is the non-outsiders liability. We can write directly by provision. Then loan is the outsiders liability, that is the by law. Now we will see next slide. That is flowchart number 5. In this flowchart, what we have, assets realized amounted to 80,000. Assets realized, that is assets sold. Sale of asset brings income. Income nature is credit. We are preparing realization account on the basis of nominal account rules. As for the nominal account rules, credit side we are writing income. Income should be entered on credit side. Let's see. Assets realized. Realization of assets should be taken into the two forms. The first form, the business is getting money. We sold for cash. The assets sold for cash. Another form is that assets should be taken over by the partner. That way, assets realized should be taken into the two forms. One is by cash, another one it is taken over by the partner. Here what is applicable? Assets realized. It is not mentioning whether partners are taking or not, which means the assets sold for cash. So the applicable term is by cash account. Now see, by cash. That way we are completing assets realization. Now we will go for next slide. It is saying about liabilities were paid off. That is a settlement of liability. Settlement of liability is the expenses. Expenses should be entered on debit side as per the nominal account. Realization account is nominal account. So when we settle the liability, we should write on debit side. Moreover, transferring liability were entered on credit side by outsiders liability and non-outsiders liability. When we shift from the balance sheet, The transferring liability ended on credit side. Now, if settlement take place, it should be ended on opposite side, so that it is ended on debit side. Like assets realization, even settlement of liability also taken in the two form. One is firm is making payment by cash. Another one, the liabilities are taken over by the partner. If it is if the business paid cash, we are writing to cash account. If the liabilities are taken over by the partners, in this case we are writing to concerned partners capital account. Here it is applying the business only making payment. The business is giving money for the outsiders, so that we are writing to cash account. Now we will see next slide. This slide is saying about realization expenses. Expenses nature is debit, so that we should write on debit side of realization account. This expenses also should be taken in the two form. One is by cash. The business is making payment by cash. Another one, the expenses sometimes paid by the partner. Here, the business only making payment. It is not related with the partner's name, so that it is paid by the business by cash. So that the applicable term is to cash account. Now we will see next slide. Here I am cumulating all the points. What is the first point? We should transfer all the assets. That is the first point. The explanation I already told. Second point, we are separating outsiders liability and non-outsiders liability. Third point, assets realized. Realization of assets should be taken into the two forms, either by cash or concerned partner's capital. Fourth one, settlement of liability. This also should be taken into the two forms. Either the firm is making payment by cash or the liabilities are taken over by partner. Finally, realization expenses. That's also in the two form. Then we are closing this account because all the points we completed. If you close this account, assume debit side is excess. Debit side means expenses. If our expenses is more than our income, the difference we have to say loss. This loss should be distributed to the partners A, B, C in the profit sharing ratio. Then we are making total. Thank you.